Good morning, and welcome to another exciting day of ASX coverage. Today, we are diving into the latest developments and insights from the Australian market, with a focus on some key players and broader trends. Let's get started. ASX 200 Live, a mixed bag of results. The ASX 200 is showing a slight dip of 4 points, or 0.04%, in early trading. This follows a relatively uneventful session overnight, where major US benchmarks experienced a pullback after their recent rally. The Dow took the lead in falling, ending a 5-day winning streak, while the S&P 500 and Nasdaq closed marginally lower. Iran-Oman-Hormuz deal, a complex situation. One of the standout stories overnight was the Iran-Oman-Hormuz shipping agreement. Iran announced that the deal is agreed in principle, but with a crucial catch. Tehran has warned that it will not automatically reopen the strait, and shipping lobbies have criticized the proposed transit fees. This has sent Brent oil prices rallying by 4.6% to $83.09. Software names in the spotlight. The software sector had a notable session, with Datadog posting its worst day on record and HubSpot experiencing its biggest fall since listing. Despite reporting beat-and-raise results, these companies took a hit, while storage names dragged the chip complex lower. James Hardie, beating estimates, raising guidance. James Hardie Industries, JHX, has top estimates for Q1, reporting revenue of $1.48 billion and net income of $209.3 million. The company has also raised its full-year guidance, crediting disciplined execution and above-market growth. This performance comes despite a soft U.S. housing backdrop, which raises questions about the underlying market conditions. Charter Hall Retail REIT, Growth and Refinancing. Charter Hall Retail REIT, CQR, has delivered a slight earnings beat and firmer valuations. The company has completed its shift towards convenience net lease assets and is guiding to further growth in FY27. Gearing has been reduced to 30.9% after refinancing the entire debt platform, and the company is raising its distributions by 3.5%. ResMed, dividend increase and strong FY26 performance. ResMed, RMD, has lifted its quarterly dividend by 10% to 66 cents, capping a strong FY26. The company reported double-digit revenue growth and margin expansion. Despite a slight Q4 EPS miss, the overall performance has been impressive, and the dividend increase is a positive sign for shareholders. Nick Scali, profit growth, but revenue and NPAT miss estimates. Nick Scali, NCK, has lifted full-year profit by 22%, driven by stronger margins. However, revenue and NPAT came in just below consensus estimates, with the ANZ retail backdrop softening. The company is planning 4 new ANZ stores and 1 UK store opening in FY27, but the market reaction has been muted. Coles and Accenture, outsourcing deal and cost cuts. Coles is preparing to offshore hundreds of corporate roles to India under an expanded multi-year partnership with Accenture. The deal is worth hundreds of millions and will see up to 1,000 jobs move to India, with some handled by Accenture locally. This move is aimed at cutting costs and investing in online operations, as Amazon gains share in high-margin categories. Woodside Energy, simplifying portfolio with Calypso sale. Woodside Energy, WDS, has agreed to sell its 70% stake in the Calypso project in Trinidad and Tobago to joint venture partner BP. The deal is expected to simplify Woodside's portfolio and focus on opportunities with the best potential to deliver value for shareholders. Completion is expected by the end of 2026, subject to customary conditions. Insider trades, Webjet CEO's purchase. Webjet CEO Nicole Sheffield has purchased 250,000 shares on market, valued at approximately $99,932. This move comes after Sheffield was appointed as the company's new managing director and CEO in July. Her purchase signals confidence in the company's prospects. U.S. earnings wrap, in mixed bag. The U.S. earnings season has been busy, with several companies reporting results. Airbnb beat estimates across the board, lifting its FY26 guidance. Atlassian delivered strong Q4 results, while Monster Beverage, MNST, reported revenue and adjusted EPS beats. MP Materials, MP, and Datadog, DDOG, also reported mixed results, with Datadog experiencing a significant decline in its stock price. Oil prices, Iran-Oman-Hamas deal uncertainty. Oil prices are climbing as the Iran-Oman-Hamas deal looks set to fall short of a full reopening. European natural gas futures have spiked, and traders are pricing in heightened risk to gas tankers transiting the strait. The deal's uncertainty has sent Brent oil prices rallying, despite the overall decline in prices over the past fortnight. Dimon warns of elevated leverage risk. JPMorgan CEO Jamie Dimon has flagged elevated leverage across the financial system as a potential trigger for sudden market disruption. He highlighted the risk of higher disruption when leverage builds, citing situational awareness as a recent example. The market's ability to cope with the unwind suggests the system can absorb stress, but the risk remains. Australia's trade surplus, a surprise in June. Australia has unexpectedly swung to a trade surplus in June, with exports rising the most in 4 years. Metal ores and minerals, coal, coke, and briquettes saw significant increases, while fuel imports remain high. The outlook is still deteriorating as the commodity boom winds down and data center construction drives higher imports. Alphabet's AI bond sale, a success. Alphabet has raised $25 billion in one of the year's most sought-after AI bond sales. The investment-grade offering drew roughly $115 billion of peak demand, signaling a rebound in appetite for AI-related debt. The deal's success comes despite the tech bond sell-off in July, as Alphabet lifted its capex forecast to $205 billion. China's cheap AI, shifting investor focus. Falling AI costs are strengthening the case for China's internet stocks. The CraneShares China Internet ETF has rallied significantly, while the Philadelphia Semiconductor Index has fallen. Cheaper tokens are seen as margin positive for Chinese hyperscalers, with Alibaba and Tencent rallying on expectations of increased AI demand. Sell America trade resurfaces with policy uncertainty. Global investors are debating whether to revive the Sell America trade after a run of Fed and Treasury policy decisions unsettled the bond and currency markets. The 30-year Treasury yield has risen above 5%, and the dollar is weaker against most G10 currencies. Policy triggers include Fed Chair Walsh's communication style and the Treasury's intervention in Japan's currency market. In summary, today's ASX coverage has highlighted a mixed bag of results and developments. From James Hardie's strong performance and dividend increase to the complex dynamics of the Iran-Oman-Hamas deal, the market is full of intriguing stories. As always, investors should stay informed and consider the broader implications of these developments on their portfolios.